Ladies and gentlemen, good morning. You have been connected for the Navin Fluorine International Earnings Conference. Please stay connected. The conference will begin shortly. Thank you. Ladies and gentlemen, good day and welcome to the Navin Fluorine International Limited Q1 FY23 earnings conference call. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the opening remarks concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note this conference is being recorded. I would now like to hand the conference over to Ms. Rasika Sawant from Orient Capital, Investor Relations Partner. Thank you and over to you, ma'am.
Thank you and welcome to the Q1 FY23 earnings conference call. Today on this call we have Mr. Radhesh Welling, Managing Director of Navin Fluorine International Limited, along with senior management team. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of the company, which has been uploaded on the stock exchange and company's website as well. With this, I now hand over the call to Mr. Radhesh Welling for his opening remark. Over to you, sir.
Hello everyone. Good morning to you. And I hope you all and your families are doing well. Warm welcome to all the participants. I'm joined by Mr. B.K. Bansal, the Chief Financial Officer of Navin Fluorine, and Orient Capital, our Investor Relations Partner. I hope you all got an opportunity to go through our financial results and investor presentation which have been uploaded on the stock exchange as well as company's website. Before I move on to discuss the quarterly performance, let me take you through some of the key highlights and developments in the company. At Navin Fluorine, one of our overarching responsibilities is execution excellence and comprises the ability to commission new capacities, plans, projects towards desired outcomes. I'm happy to report that we inaugurated a manufacturing plant for Honeywell International at Dahej on well. Trial supplies have already started and commercial supplies will commence soon. As you all know, we received board approval for this project on February 25th, 2020, and the entire country went into lockdown from March 2020 onward. Also, this was a complete greenfield project where we had to first get the land ready and then start working on specific manufacturing plants. We have managed to successfully complete this large and complex project through 3 tough phases of COVID-19 pandemic. Setting plant in around 2 years is demonstration of our strong technical capabilities and our commitment to growing our partnership with Honeywell. The next generation product out of this facility has a very low global warming potential, GWP, and no ozone depletion potential, thereby helping customers lower their carbon footprint and improve energy efficiency without sacrificing end product performance. From this financial year, we have redefined our business units and implemented a new organizational structure with very clear 3 BUs, each headed by operating CEO with full P&L responsibility. The 3 business units would be High Performance Products, CDMO, that is Contract Development and Manufacturing Organization, and Specialty Chemicals. High Performance Products business would include erstwhile inorganic fluorides, refrigerant gas, and high-performance products. I'm also very happy to inform you all that we have appointed Mr. Partharoy Chaudhary as CEO of our HPP business. As some of you might know, Partha worked with Navin from 1995 to 2016 and was the CFO in his last role. He understands the company and business very well, and I'm very happy back at Navin Fluorine. Let me now take you through the operating performance for Q1 FY23, and then Mr. Bansal will update you on the financial performance. Operating revenue stood at rupees 386.8 crore, a growth of 23% on Y-on-Y basis. We recorded highest ever quarterly sales in specialty chemicals of rupees 176 crores. Operating EBITDA stood 99.9 crores, growth of 28% on Y-on-Y basis. Despite several headwinds, we managed to achieve operating EBITDA margin of around 26%. Operating PBT stood at 88.1 crore with a growth of 32% on Y-on-Y basis. Now moving on to discuss the operating performance of each business unit. Our specialty chemicals business continues to deliver strong performance driven by strong partnerships. We achieved record quarterly revenue in this business unit in the last quarter and reported revenue growth of 32% on Y-on-Y basis at rupees 176 crore for Q1 FY23. The growth of this business is driven and will continue to be driven by significant improvement in new business pipeline. The segment has very strong pipeline of growth in line with our 3Ps principle: product, platform, and partnerships. The revenue contribution from international business is about 48% and 52% is from our domestic operations. Our HPP business grew by 33% in Q1 FY23, is 152 crores compared to same period last year. From this quarter onwards, we have merged our erstwhile inorganic fluorides and refrigerant gas business and the new HPP business into new high-performance product business vertical. The growth in this unit for this quarter was driven by higher volumes as well as strong pricing in inorganic as well as refrigerant gases business. We are working on identifying new opportunities in our inorganic as well as in the industrial gases portfolio. Revenue from the new integrated plant for Honeywell will start from Q2 FY23. The international business contributed about 22%, whereas balance 78% is from our domestic operations. Board has approved debottlenecking of rupees 80 crores for a new molecule in this business unit at Surat. Manufacturing of this product will start from July 2023. Our CDMO reported revenue of rupees 59 crore in Q1 FY23. As we have already highlighted in the past, it's unfortunately difficult to assess performance of this business on a quarter-on-quarter basis. Our focus in this business continues to be on expansion of new project pipeline and further diversifying customer base. In this
some understanding about what can be the opportunity size, some rough understanding of the same would also help, sir.
Typically, we don't like to talk about, the opportunity size on a product basis unless it's a large building block. Okay. Then obviously, because the building block then typically goes into multiple products, etc. One of which we have actually invested in setting up a plant which is going to get commercial. Individually, we don't typically like to talk about, for the obvious reasons.
Correct. And sir, like what you have mentioned that we have been investing significantly in the R&D. Probably the annual report talks about initially we are putting up 40 crores in that R&D block. And even if we see on a yearly basis, we are investing now more than 10 to 15% of our profits into R&D, which is visible in the disclosures you have been made. So just wanted to understand, like, given the new players also are entering the fluorination space, what could be the challenges for us in terms of upping our R&D capabilities with respect to the new recruitments probably our competitors would have been doing, or in order for us also, because now we have been investing significantly. So what challenges we could face in terms of recruiting and retaining those top level employees at Navin?
Yeah, so if you actually look at specifically related to this particular space, which is fluorination,
yeah,
our focus has been to continuously upgrade our capability fluorination. So wherein we actually started from a simple Halix-based chemistry, then thereafter we went to HF-based chemistry. Now if you look at the chemistries that we typically handle, within fluorination or in the adjacent spaces, these are extremely complex chemistries. So we believe that, as you rightly said, in the next few years, our internal assumption is that some of these new players will be able to handle the Halix or HF chemistries as well as some of the incumbents today do. So it's very critical for us to ensure that whatever that gap exists today, the capability level between us and some of these new players continues to remain, and hence we are continuously focusing on upgrading our capabilities. Now when I talk about capabilities, these are chemistry-based capabilities, these are engineering-based capabilities, and then there are infrastructure-related capabilities and talent-related capabilities. As far as the talent retention is concerned, on the chemistry side, our ability to retain talent across the sites is relatively higher. And that's primarily because of the kind of opportunities that we present to some of these people, to work on. The issue that we typically face is on the engineering side, where, we believe that there could be some. And hence what we've done is we've actually just recently ran, internally it is called a STAR program, Special Talent Recognition Program, where we identified high potential as well as critical roles and worked on specific programs around that. And this is actually across the company, not only limited to chemistry and engineering. That's basically, towards ensuring that the talent remains with the company for the foreseeable future.
Got it, sir. Got it. Sir,
I'm sorry to interrupt. Kindly come back in the question queue.
Thank you, sir, for answering the questions in detail. I'll join back in the queue, sir.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, kindly restrict questions to 2 per participant initially. If you still have more questions, kindly join the queue afresh. We have next question from the line of Sanjesh Jain with ICICI Securities. Please go ahead.
Good morning, Rajesh and Bansalji. First of all, congratulations on starting the first large project HPP. On the HPP side, I just wanted to understand how has been your initial days experience on running the plant, and more so on the raw material sourcing now that we have started. Which are the key raw material in this product, and where are we sourcing for these products? That's my first question. Second, on the HPP side, it looks like there is a slight underperformance in as well inorganic chloride. because ref gas is a seasonally strong quarter and R22 prices have gone up. So what is that industry dynamic weakening hurting us also in organic fluoride? And a related question to that is that the margin expansion we have seen this quarter on quarter, can it be attributed to the stronger sale of domestic ref gas, which we have earlier quoted as one of the reasons for why our margins were weak when this fell? So these are my initial questions. Thank you.
Yeah, I think you have asked about 3-4 questions. Let me try and take each of them. If I miss answering it, just let me know, then I can, again come back. As far as the HPP plant is concerned, our initial experience has been extremely heartening. I think as I had indicated earlier, we have actually 2 main plants. So the first plant actually manufactures the intermediate and goes as an input to the second plant. The first plant is a little tricky, and our technology supplier had indicated to us it could actually take us anywhere between 3 to 6 months to stabilize that plant. Our team has actually managed to stabilize that plant in less than 4 weeks, which is also seen in the we have already started supplying the trial quantities from the second plant. So I think our initial experience has been extremely heartening. What our tech supplier expected us to do in 3 to 6 months, the team has really achieved in a record time. As far as the raw materials is concerned, one of the important raw materials is HF, which is currently being supplied by Surat to HPP. We are also currently working on possibility of setting up a new large HF facility in Dahej itself. But currently it has been supplied by Surat. There are some other raw materials, all of which have been locked into long-term agreements, which actually mirror our long-term agreement with the customer. On the performance between inorganic and ref gas, this particular quarter, we've actually seen a pretty strong performance on both inorganic as well as refrigerants. And on both the sides, on both the parts, it's been both through volume as well as pricing actions. I would say on the refrigerant gas, it has been more on the volume than on pricing. In inorganic, it has been more on the pricing than on the volume. But even on inorganic, we have seen pretty strong growth, and a significant part of that is because of the volume. Have I answered all your questions, or is there anything that is?
No, I was more looking from the sequential perspective, Rajesh, on this last one.
Yeah, on the sequential, you see, our business, you cannot look at it from the sequential perspective because a lot of it is, very seasonal. Even in the inorganic business, within that there is a lot of seasonality because, as you know, of our molecules actually go into agrochemicals, etc. Even on the inorganic side. So we've always maintained that the right way of looking at our business is on a year-on-year basis.
And the reason for the margin expansion sequentially, is it more of domestic ref gas sales? Is that the right understanding?
So on the ref gas, our volume has actually grown across
rationale behind redefining your inorganic and ref gas as an HPP segment? Because if I remember, we used to indicate that HPP will report separately. That's one. And secondly, in terms of your HPP initial teething issues, so has that risk from the plant resolved now? And if there was any teething issue, can you quantify it, how much it was?
Yeah, so let me your second question first. I think I already spoke about that in my earlier commentary. I wouldn't really say that there were any big issues. As I mentioned, our technology supplier had actually talked about 3 to 6 months to actually, get that plant stabilized and start getting the molecule, and our team has actually been able to do that in less than. So we've really not seen any significant teething problems. There are some usual, typical issues which are there, but those are not really of material significance. On the second part, the rationale for combined, as you know, that earlier we about 4 years back, our primary focus was on CDMO, and we were really focusing on growing the CDMO piece, which was then called CRAMS, whereas we didn't really have very strong growth plan on in some of the other businesses. And I've maintained that each of our business verticals has very strong growth prospect, and very soon, one by one, they will all start finalizing their growth strategies, and they'll be on their individual growth track. Now what we have tried to do is that for each of these, that is inorganic, ref gas, as well as on HPP, we have actually developed a very clear growth strategy. We have a plan on refrigerant side, we have a clear plan on HPP, and on inorganic, it's still a little work in progress, but we are very confident that each of these three will actually have its own growth trajectory. What we try to do, but again, there is a lot of synergy between these three businesses. For example, the product which is produced by one is a raw material for another, etc. So we felt that if you actually combine it, because otherwise it will be misleading the external stakeholders. So we combine these three business verticals, and they look at in combination what the growth in the vertical is. And the third reason is that some of these businesses are almost like single molecule or limited molecule businesses. So when we actually declare the results of some of these businesses separately, it's very easy for the competition to really understand what the revenue is of that one specific molecule or those limited number of molecules. And for confidentiality reasons, we didn't want all of that to be so transparent. So that is the reason, these are the three reasons we decided that we will actually combine these three businesses into one business vertical, which will be called high performance product going forward, and we will see each of these three. Also, we decided to rename the CRAMS business into CDMO business, because that truly reflects what we do. We are not really into CRAMS business, but we are more into CDMO business.
Understood, makes sense. And lastly, in terms of your HPP plant full utilization, as we had indicated earlier also, and the plant has now started. So do we remain confident that within next 1 or 2 quarters, we should reach to full utilization of this plant?
So if you see my commentary, when we got the board approval and I'd presented this particular, I'd responded to this particular point, I had mentioned that from year 2 onwards, we expect the plant to start operating to the full capacity. There will be a ramp up in year 1, but year 2 onwards, we expect that the plant would more or less running to almost the full capacity. We expect that from Q4 onwards itself, so that is the first quarter of the calendar year 23, we should start seeing relatively full capacity, if not 100%, close to full capacity.
All right, sir. That's it, and all the best. Thank you.
Thank you. We have next question from the line of Vivek Rajamani with Morgan Stanley. Please go ahead.
Hi, sir. Congratulations on a very good set of numbers. Two questions from my end. So if you could just share some qualitative information in terms of how your plans have run this quarter and how you see this evolving over the next few quarters. And I guess the second question would be, from a management perspective, is there any one or two particular issues that you are currently focused on which you think would be critical over the next 3-4 months? That would be really helpful as well. Thank you.
So now commentary around the plants you were asking?
The plant runs, correct, sir. Utilization or just optimally, if you could just give some qualitative comments, that would be really helpful.
Sure. So I think HPP, the erstwhile HPP, I think I have already spoken about. The plants in Surat of HPP are running to almost full capacity. Refrigerant gas plant, of course, there is a capacity headroom and we are working on some options there. In specialty, in most of the queues, we are running almost to full capacity or close to full capacity. As you know, in specialty, we have some of them are dedicated blocks like the ones for me, or there are multi-purpose plants there. So multi-purpose plants are running to almost full capacity. Of course, product by product, it could, depending on the product that we run in the specific, it could vary slightly. But specialty, we are actually running to almost optimum capacity, because of which the need for a lot of these new projects in the Dahej. As you know, we have already announced 3 for specialty in the Dahej. This is primarily trying to address that capacity utilization issue on the specialty. On inorganic, we have some capacity headroom available in some of our smaller molecules like NF, etc. But on the larger molecules like HF, etc., we are running the plant to actually more than full capacity. On the CDMO side, in Q1, we had the capacity headroom available, but we expect that from August onwards, the plant will again start operating to almost optimum capacity.
Thank you, sir. Very, very useful. And sir, any comments on how you see this shaping up over the next 2-3 quarters?
Are you talking about specifically plant capacity?
If you could just focus on the specialty segment, that'll be great as well.
So I think the other question that you had asked was priority for the next 3 to 4 months. I missed answering. I think there are clearly 2-3 priorities. One, which is the ongoing priority, which is around talent management. The second priority would be to ensure these plants which are started or which will be starting in the Dahej to ensure smooth operation of these 3 plants, so HPP, and there are 2 plants that commissioned in the next few months. So to ensure that happens.
decision taken on the possible foray into HFCs? And also the annual report has a mention of supplying R22 PTFE as a large opportunity as a non-Chinese supplier. So I just wanted to clarify whether that is for the gas that you'll be supplying or for the polymer also, the PTFE also. Thank you.
Yeah, so on your firm of HFC, we are evaluating various options there. On the second point, it was specifically talking about supplying R22 for PTFE manufacturing. We are actually looking at either supplying R22 as such or supplying the downstream of that, but that is primarily the point of view of capacity utilization. It's not going to be a kind of a long-term strategic this one. We are actually looking at some other strategic options for converting R22 ourselves into some other potential value-added molecules, or retrofitting that plant to manufacture some other molecules. So we are looking at those two as long-term strategic options. So this one is more going to be an interim option till we actually get that other piece done.
Understood. Thank you so much, sir. I wish you all the best.
Thanks.
Thank you. We have next question from the line of Ankur Periwal with Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congrats for a good set of numbers. First question, on the capital allocation side, especially when the business rejig from a reporting perspective is already behind us, and you did allude it to dedicated capex for the respective businesses subject to opportunities. So how at the company level, how should one look at from a capital allocation perspective? CDMO, because you did mention CDMO, CGMP4 as well under discussion now. So your thoughts there.
So in each of the three business verticals, specialty, CDMO and HPP, we have very clear growth plans. At an organization level, we don't start by having a very clear capital allocation strategy in terms of, this percentage should go to this business, etc. It's more bottoms up, where each of the businesses actually is responsible for developing their own strategy and growth plans, and then accordingly we decide the capital allocation piece. But currently, if I look at it, all the three businesses, we have growth plans in the immediate future. As you can see from the capexes that we and will probably be announced in the near future, specialty will clearly take a large portion of the overall allocation. But as I mentioned, we are working on CGMP4 business case for CDMO, and also we are working on some other opportunities on the HPP side.
Sure, sir. That's helpful. And just a clarification, the healthy growth that we saw in the specialty business this quarter, and I'm trying to connect your comments on the R&D side as well for the new products commissioning, etc. This is largely led by the existing product portfolio, and the incremental contribution from the newer products, which are largely agrochem, is yet to play out. Will that be fair understanding?
Yeah, so there is one molecule we launched in this particular quarter. So some of that growth has actually happened through this, but primarily I would say it's happened through higher volume of existing molecules.
Great, sir. And just one clarification, the incremental expansion, whether in HPP or in specialty, the working capital for over here, how should one look at it? Because if I look over the years, there is slight increase there because of our expansion. So your comments there.
Yeah, so the cycle is generally of 90 days, and we hope that it will be maintained. Maybe in the short time, it can go some, here and there little bit, but otherwise it will be around 3 months only.
Sure, Bansalji. That's helpful. Thank you and all the best.
Thank you. We have next question from the line of Ishmohit Arora with SOIC LLP. Please go ahead.
Hi, sir. Congratulations for a great set of numbers. So my first question was, as a management thought process, I just wanted to understand that when it comes to the agro business and the pharma business, we are mainly into the intermediate categories. Especially for agro, do we have plans to get into active ingredients, and especially for pharma, do we have plans to get into API manufacturing as well? And if not, then what are the reasons for not getting into it?
Sorry, your voice wasn't very clear. I understood one part of that question where you asked if we have any plans to get into API business. What was the other part of that question?
Excuse me, sir, this is the operator. Mr. Arora, please use the handset. If you are connected on a headset, please remove that and speak on your handset, sir. The audio was not coming very clear. Can you please repeat your question, Mr. Arora? Sir, I'm sorry, we are unable to hear you. Could you please repeat your question so that the management can answer back?
So let me respond to the question that I heard, which was around API piece. We don't have any immediate plans of getting into APIs. Our immediate plan, and which we have already started working on, is to actually get into doing more of advanced API, but no immediate plan of getting into API, because we feel that API piece is actually more of a commoditized piece.
Thank you. We have next question from the line of Tejas Sheth with Nippon India AMC. Please go ahead.
Yeah, hi sir. On the HPPs, so when we signed the contract, the input cost economics and the logistics cost economics, even the power cost economics were very different. So once we ramp up this full capacity, would the margin profile of this project be very different, or how the pricing contract is signed in this molecule?
No, so as we had indicated earlier, the margin profile of this business is going to be pretty in line with our overall company, so slightly higher than the overall company. And the way the agreement was structured, it was basically on a cost plus basis. So increase in the input cost, etc., there will be a clear pass-through.
And secondly, what is the potential of the two new molecules under downstream of HPP? Is that something which can be a big investment potential, or is it something which is a kind of add-on and hence the investment potential will be minuscule?
No, those, see, typically what happens is, unlike in, actually look at the three businesses, right? HPP, CDMO, and specialty. Specialty, typically there are two kinds of CapEx programs. One is in form of a NPP, which is typically a multi-product, multi-process plant, or there could be a dedicated facility. So dedicated typically tends to have a non-incremental CapEx or non-incremental impact. On the CDMO side, it's always on the NPP side. But on the HPP side, unless it's a small debottlenecking project, it is typically always, there's always a non-incremental impact, both in terms of capital investment, also the impact on the business.
Okay. So the opportunity can be sizable there.
That's correct.
Okay, fine. Thank you.
Thank you. We have next question from the line of Bharat Shah with ASK Investment Managers. Please go ahead.
Society's work ethic is somewhat poor. The incompetence in the way they've handled the inflationary situation, and generally inability to really, clear the ground for future by doing more innovative work. Do you think this will have impact on your business and on your plans over long run?
So good morning, Bharat Bhai. You're absolutely right. This is something that we are trying to make an assessment on. We believe that the issues that we are seeing in Europe will clearly have impact on two businesses. We are trying to understand what the potential impact could be on the HPP side, both from the opportunity perspective as well as challenge perspective. But we clearly understand that it will have an impact on the CDMO side, which is why we are accelerating our move into at least the advanced intermediate, so that, because earlier some of our intermediates were going to Europe for conversion into advanced intermediates and then the API. So we want to actually move that advanced intermediate piece also in-house, so that, from the challenge perspective, our business doesn't get impacted. From the opportunity perspective, we have actually started having a lot of conversations with the customers, wherein we are positioning ourselves as an alternative to Europe, as well as to their own manufacturing, some of their own manufacturing which was happening in Europe. Also in specialty, we are seeing the same dialogue currently happening on the agrochemical side. So clearly, on a mid to long term basis, we believe that it's going to be net positive for our CDMO business and on our specialty business. One more point that I would just like to highlight here is that on the specialty side, that lot of dialogue has currently been happening, or in the past also has happened, primarily on the agrochemical side. Now, as some other Indian companies are also trying to look at this space, etc., we have consciously started working on a lot more opportunities within the specialty side on the performance materials side. If you look at three of our businesses, HPP, CDMO, and specialty, the way we have configured that, specialty is a service business, CDMO will be a service plus product business, and HPP will be product business. So on the service side, which is primarily specialty, we have also started working on opportunities in the performance material side. And again, there we are actually seeing a lot of traction, and we believe it will basically be significantly positive the years to come for our specialty business.
That's very useful. That's a second question. If you look at last few years, Navin has been transforming itself based on the tremendous strength in the fluorine and complex chemistry emanating from that. So we have struck some very good long-term contracts, people, capability building, infrastructure, investment in research, generally sharper focus on the way the business is being evolved and shaped. So bulk of, I suppose, a significant part of the transformation, I think with some satisfaction we can say that it is in the bag. Now if you take a look at next 3 to 5 years, what it will mean for Navin in terms of growth, scale, capability, customer relationships, depth, and in general overall long-term outcome in terms of Navin, given the kind of significant changes which we have brought about.
So I think, Bharatbhai, I think the question that you have asked, really warrants a very long kind of I don't know if we will have time for that, but we can go into the details. But I'll tell you, let me just, address that question by summarizing in steps. One, we have to be completely focused on the execution, because if you just take the projects that we have already announced, actually ensure that the execution is absolutely good, something that we have already demonstrated in this HPP project. Despite all these headwinds, we have managed to actually complete that project in around 2 years, which is what we had actually told the market when we actually signed the contract and announced the contract. I think the first thing is just pure execution excellence. If you do that, you can actually just add up the numbers we already announced, when we announced each of those capexes. You will see a significant growth in the top line as well as bottom line. Also, what will happen is if you execute this well, because some of these projects are with very large customer, and we have just started scratching, the surface in terms of, their overall consumption base. So, I mean, if you look at in terms of share of the wallet, we will still be a very small percentage, in terms of their total purchase basket. So just with these customers that we are executing this project, the size is significant, and hence, as I have always maintained, that if we do this, the momentum effect will actually start coming in, and we'll start seeing a significant growth. The second point, as I've said, we have brought in very sharp focus in terms of what we do and what we will do in each of the three businesses, and hence, as I mentioned earlier, service, product plus service, and product. So, for example, in specialty, we said that irrespective of what molecule we supply, we are basically a service provider, a development service as well as manufacturing service. Today, most of what we do there is primarily for our agrochemical and pharma customers. There is no reason to actually start getting into the performance material space. And as you know, the performance material space is significantly larger than the agrochemical space. So we basically take the same set of capabilities, same set of building blocks, same set of platforms, but start appealing to or positioning that with a much wider set of audience. So that will actually give us a significantly larger growth opportunity. And the third one would be in form of the product piece that we talked about. There are a number of new opportunities that we have identified, we are working on, some in HPP, some outside of HPP in new emerging segments. And again, there we are, we are currently really trying to understand which of these we should really invest in for future growth, because they are actually clearly non-incremental in nature, both in terms of investment as well as in terms of impact on top line and bottom line. So that would, at a very high level summarize how we are looking at the business. But our clear focus is to ensure that if you look at, by let's say FY25 or FY26, in terms of size, we would be significantly bigger than what we were in FY22. Also, the nature and the quality of business will be significantly different than what has been in the past or what it was in FY22.
Thank you, Rajesh. I'll take up that detailed thing separately with you. But thank you so much.
Thanks.
Thank you. We have next question from the line of Jason Soans with Ashika Stock Broking. Please go ahead.
Yes, sir. Thanks for taking my question. So just, I know you did touch upon this, but just wanted to know, your gross margins here in this quarter have shown a good 220 bips improvement sequentially. Now, last quarter you did talk about, the gross margin being impacted due to high prices of a host of commodity items such as solvents, molten sulfur, which you have to procure from the spot market. So just wanted to know in that perspective, have you seen those prices, moderate, or is it some impact more of a product mix impact or a price hikes impact? Just wanted some color on this gross margin improvement, especially in this scenario where a lot of inflation is there already in the market. So just wanted your thoughts on that for this reason in improvement in the gross margins.
Sure. So it is a mix of, 2-3 things. One is we have been able to take price increase, and there is a little bit impact of the product mix also. Okay, so because of that, we have been able to maintain our, gross margin. In fact, I touched upon this in my, opening remarks also.
Okay, sure. So, and my next question is, I just wanted to know, congratulations on bringing Mr. Partha Roy Chaudhary on board. And I heard in your opening remarks that he'll be the president of the HPP segment. Now, just if you could just highlight of course, there is this rejig which you have done. So if you could just highlight a broad outline of the strategy or the vision you have for the HPP segment going ahead with Mr. Partha Roy Chaudhary at the helm. If you just broadly outline that would be really helpful.
No, sorry, I didn't understand the question. Outline what? The strategy?
Yes, the broad level strategy of the HPB segment, now you reject it as well, with bringing ref gas and IO also in the fold, plus the HPB segment, and you will have Mr. Pataroy Chaudhary as the president of the HPB segment. I think that's what I heard in the initial commentary. So just wanted to, if you could, just highlight a broad outlook for that segment going ahead for the HPB segment.
Yeah, so I think, obviously there is a detailed strategy that we are actually working on for that particular segment. I think the clear, if you look at this, step 1, step 2, step 3, is that step 1, we have already got some projects. We want to ensure that we execute them and ensure that these projects, reach their potential, including, as I had mentioned to you earlier, in HPP there is some debottlenecking possibilities, so which we are looking at, and we will probably implement that later in the current financial year. Second is inorganic and ref gas business. We've actually in both, we are kind of trying to broaden the definition, and in inorganic trying to look at some opportunities going into similar set of customer requiring similar set of capabilities but non-fluorinated inorganic compounds. And on the ref gas, rather than trying to define that as ref gas, we're trying to see if we could actually define it a little broadly in terms of industrial gases. And we started identifying some opportunities therein, which some of them are with some of our existing partners, some of them will be with new partners, some of them will be done by separately by us. So that would be, I would say, the second piece. And the third piece is in some of these new emerging segments we have as I've indicated earlier, we've actually got clear set of opportunities that we've been working on. Now the question is, should that be part of HPP or should that be outside of HPP? So that's a decision we will take soon. But I would say, at a very high level, these are the three set of opportunities we are working on in HPP. But of course, there is a detailed strategy piece that we are currently working on in HPP.
Sure, sir. Thanks for that. And sir, just one question what I want to ask you. I mean, you have quite a lot of times mentioned that, the quarterly run rate for CRAMS is around $10 million. And in this quarter, we are really short of that. So is there some spillover, to the next quarter, like it did happen in the quarters before that? Is there some spillover? Would just want your thoughts on that. And just a broad overview on the specialty chemical segment demand outlook as well. You did mention that the ARV segment is seeing some slowdown. How is that impact, or any other points which come to your mind in terms of the specialty chemicals demand outlook and the CRAMS piece which I just asked?
Yeah, so on the CDMO side, as I have indicated earlier, H1 is likely to be soft. So, so we will not see, Q2 actually taking care of that gap in the run rate. But we are actually seeing H2 to be extremely strong. So whatever gap we see in H1 will be more than taken care of in H2. That is how we are currently seeing this particular business. And similarly, the next year, because as I mentioned before, our calendar year 23 is looking extremely strong. On the second question, which is around specialty, ARV continues to remain extremely soft. About 2 years back, as you might know, our dependence on ARV, both on the top line as well as bottom line, was extremely high. But what we did was very quickly, we identified some alternate opportunities to put in that plant where the ARVs were getting manufactured. And we've been pretty successful in doing that. So today, our overall dependence on ARV has come down significantly, but we are not really seeing that demand in ARVs actually come back to where it was during the pre-COVID era. But it doesn't really today our specialty. Our specialty will continue to grow despite ARVs.
Sure, sir. Thanks a lot for answering my question.
Thank you. We have next question from the line of Dhiresh Pathak with White Oak Capital. Please go ahead.
Yeah, thank you for taking my question, and congratulations for early stabilization of the HPP plant. I just taking forward an earlier question on the raw material being a pass-through in most of these bigger contracts, but you also mentioned that one of the priorities for you is securing raw material. So just trying to again clear my understanding that both on the raw material side as well as on power and fuel and steam and the other logistic costs, all of those would be passed through in these large contracts, or they would be passed through after certain thresholds increases?
No. So let me make it very clear. Thanks for asking that question. So when I talked about securing raw material, I wasn't about securing raw material for HPP. I was talking about securing raw material for the new projects which will be coming on later in the year. So the MPP and MPP will actually get commissioned in phases, and then the dedicated agro block which will come by December 2022. So I was primarily talking that. I was not talking about HPP. HPP is already secured. On the input cost, there is a pass-through. Because of the way the agreement is structured, some of it could happen with some lag effect, but there will be a complete pass-through.
Okay, understood. Thank you so much.
Thank you. We have a next question from the line of Sunny Roy, an investor. Please go ahead.
Sir, good morning. I have one question on the CDMO side. Can you quantify approximate how much percentage of the last year's revenue to 97 crore CDMO is contributed by the top 20 big pharma companies? And what are we doing on the business development front to get more business out of the big pharma companies in CDMO? Thank you.
No, so in terms of revenue, I would say a significant portion of that was with top 20 biopharma companies. There used to be some business with the smaller biopharma companies, but fortunately or otherwise, they have also been now, as the molecules are growing, they have been actually purchased by the large biopharma companies. So a significant edge of that revenue is actually coming from the top 20 biopharma companies. Now, what we are doing in terms of business development, we are increasing the number of BD people in the market. So we have actually hired new business people both in Europe and in US. And as I have indicated earlier, our focus is to expand our customer base, to actually bring in a lot of these new biopharma companies which exist both on the East Coast as well as West Coast in US. To develop deeper engagement with our existing customers so that we get more number of inquiries and possibly some non-fluoro inquiries to existing customers. So basically focus more on the partnership piece. And the third is, with some of these customers or some of the other larger biopharma companies, to try and see if there are any late-stage opportunities that we can develop and start supplying to. In terms of order of difficulty, they actually go, the three that I mentioned, they're basically in the respective order of difficulty. The first one is relatively easy. The third one is relatively harder to do. But those would be, at a very high level, some of the business development initiatives that we have undertaken.
Right, sir. So, and out of these top 20 biopharma companies, do we also, do they include the companies which make NCs, the patented NCs, the innovators, like Abbott, Pfizer, Johnson & Johnson? Do they, I'm not talking about the name, but do they include all the chemical companies as well who are making the NCs?
No, none of this actually includes any chemical companies. All of the customers there are only the large biopharma companies like Merck's of the world or Pfizer's of the world or Gilead's of the world.
Okay, sir. Thank you so much.
Both European as well as American.
Thank you, sir.
Thank you. Ladies and gentlemen, in the interest of time, that was the last question. I'd now like to hand the conference back over to Mr. Radesh Welling for closing comments. Over to you, sir.
I would like to thank everyone for joining on the call. I hope we have been able to respond to your queries adequately. If you have any further queries, you may reach out to our investor relations partner, Orient Capital. Thank you very much and have a good day.
Thank you very much, sir. Ladies and gentlemen, on behalf of Navin Fluorine International Limited, that concludes this conference. Thank you for joining with us, and you may now disconnect lines.